Hello everyone, welcome back to Stock Market Meridian. Today is 13th August 2026 and you're watching today's pre-market report. Let's begin with the global markets. Starting with the US markets. Only the Dow Jones index closed in the red, while the remaining major indices ended in the green. However, at present, US index futures are trading in the neutral zone. And in the European markets, all the major indices closed in the red. Now, looking at the Asian markets, Japan, China and South Korea are currently trading in the positive zone. So overall, today's global market setup is indicating a neutral to positive sentiment. But the big question is, will these global cues be strong enough to support the Indian market today? We'll have to wait and see. Now, let's move to commodities. Starting with crude oil. US WTI crude oil is currently trading around $81 to $83 per barrel, while Brent crude is trading near $90 to $92 per barrel. And crude oil remains one of the biggest factors to watch because prices are still elevated. Yesterday, Indian crude oil futures ended almost flat, with a marginal decline of just 0.15%. Meanwhile, natural gas futures gained around 1%. Now, moving to precious metals. Indian gold futures closed with gains of around 0.7%, while international gold futures are currently trading lower. In silver, Indian silver futures gained around 0.9%, while international gold futures are currently trading in the negative zone. So, overall, commodities are showing a mixed picture, with crude oil remaining elevated and precious metals seeing mixed global cues. Now coming to the GIFT Nifty. Yesterday, GIFT Nifty closed at around the 24,417 level and today it opened at almost the same level. So at the moment, GIFT Nifty is indicating a muted start or a slight gap down opening for the Indian markets. Now let's check ADR data. Yesterday, all the major Indian ADRs we track ended in the negative territory. Infosys, Reliance Industries, Wipro, HDFC Bank, Dr. Reddy's Laboratories and ICICI Bank all closed lower, but one stock particularly caught my attention. Infosys ADR declined by around 2.5%. That's a significant move and it could indicate negative sentiment toward the Indian IT sector when our domestic market opens. So IT stocks could remain under pressure today and this is something traders should keep an eye on. Now let's move to the FII and DII data. After 3 consecutive sessions of buying, foreign institutional investors once again turned sellers yesterday. FIIs recorded a net sell of around 1,000 and 2,000 crores. But there was a very strong counterbalance from domestic institutional investors. DIIs recorded massive net buying of around 5,841 crores. So despite FIIs returning to the selling side, the overall institutional flow remains relatively supportive because of strong DII buying. For now, I would consider the FII stance neutral rather than strongly negative. But if FII selling continues for several sessions, that could become an important risk factor for the market. Now, let's check the economic calendar. Yesterday, Germany's CPI data came in broadly as expected. India's CPI inflation came below both the previous level and market expectations, which is a positive development from an inflation perspective. Meanwhile, US CPI came higher than the previous level but still came in line with market expectations. And US crude oil inventories were lower than the previous reading, although they were still above market expectations. So there were mixed signals from the global economic data. Now, what should we watch today? Today, we have important releases including UK GDP data, US PMI data and US initial jobless claims. And tomorrow, we will get India's WPI inflation data, India's foreign exchange reserves and US retail sales data. So traders should keep an eye on these numbers because they could influence both global sentiment and the Indian market. Now, let's move to the geopolitical developments. And this is one area where the situation remains complicated. While regional mediators continue trying to revive diplomatic discussions, Washington and Tehran are still exchanging strong warnings over maritime control and ceasefire arrangements. According to senior Iranian sources cited by Reuters, there are currently no active discussions regarding an extension of the ceasefire with the United States. Iranian officials have also claimed that the US violated the interim agreement within 48 hours of reaching it and later withdrew from the arrangement. Tehran says there has been no meaningful progress toward resolving the remaining disputes or establishing long-term peace terms. Iran continues to demand an end to US sanctions, the unfreezing of overseas assets, and compensation for war-related damages challenges before formal negotiations resume. But on the other side, US President Donald Trump has taken a very different position. Trump stated that the United States maintains total control over the Strait of Hormuz and intends to keep it. He also described the US naval presence and shipping blockade in the Gulf as a wall of steel. Trump further claimed that Iran's military capabilities have been heavily weakened and that the country's economy is being severely affected by inflation. Although Trump said the situation with Iran is going fine, diplomatic reports suggest that the core peace negotiations remain stalled. Meanwhile, Pakistan is also becoming involved in the diplomatic process. Pakistan's Interior Minister Mohsin Naqvi visited Tehran to meet with Iranian leadership as Islamabad continues its efforts to mediate between the United States and Iran. The main objective remains the same: find a diplomatic framework to reduce hostilities and restore stability to maritime traffic through the Strait of Hormuz. However, tensions elsewhere in the region are still continuing. Despite existing ceasefire arrangements, the Israeli military carried out fresh airstrikes in Gaza, along with military operations in southern Lebanon. So overall, the geopolitical situation remains highly sensitive, and any sudden escalation could immediately impact crude oil prices, global markets, and investor sentiment. And now, here's an interesting development that could attract a lot of attention. A federal lawsuit has been filed in Manhattan challenging a controversial Truth Social subscription service that reportedly charges Wall Street firms as much as $1 lakh per month for faster access to posts. The lawsuit was filed by the Intercept Media and the Freedom of the Press Foundation. The case challenges the legality of Truth API, a premium service that provides paying customers with advance or fractionally faster access to posts from Donald Trump and other prominent users. And why is this controversial? Because the service can deliver posts in a machine-readable format within milliseconds of publication. For high-frequency trading firms and institutional investors, even milliseconds can potentially provide a market advantage when posts contain market-moving information. The service reportedly costs $1 lakh per month or around $60,000 per month with a multi-year commitment. The plaintiffs argue that providing preferential access to official government announcements for paying customers raises serious constitutional concerns. They also argue that Trump could financially benefit because the service is operated through a publicly traded company in which he remains the largest shareholder. Trump Media, however, defends the service as a standard fast distribution data feed. According to the company, more than 10 customer agreements have already been signed, and the company is reportedly discussing distribution with major technology companies, news aggregators, hyperscalers, and financial data terminals. So what do you think? Is this simply a premium financial data service, or could it create an unfair advantage for institutions with deeper pockets? Let me know your opinion in the comment section. Now, let's move to some important company updates announced after yesterday's market close. First, Jio Financial Services. Jio Financial Services announced a landmark joint venture agreement with global banking giant Bank of America. Under the agreement, Bank of America's subsidiary NB Holdings Corporation will invest up to 18,268 crore rupees to acquire up to a 49.9% stake in Jio Credit Limited. The deal includes subscription to more than 4.29 crore equity shares for rupees 6,612.90 crore rupees, giving Bank of America an immediate 26.50% stake. It will also subscribe to more than 7.56 crore warrants worth 11,655.32 crore rupees, which can be converted into equity within 18 months. After the warrant conversion, Bank of America could hold a 49.90% stake in Jio Credit. The board will have equal representation from Jio Financial Services and Bank of America, while the existing management will continue running operations. Jio Credit has already built assets under management of around 30,667 crore rupees as of June 30th, 2026. The company provides multiple credit products, including retail mortgages, loans against securities, commercial lending, and supply chain finance. Importantly, Jio Credit will continue to remain an operational subsidiary of Jio Financial Services. Overall, this partnership could strengthen Jio Financial's digital lending business while bringing significant global banking expertise and capital into the platform. Next, a major development from the Indian defense sector. The Defense Ministry has issued a tender worth around 1 lakh crore rupees to procure 60 multi-role transport aircraft for the Indian Air Force. The tender has been issued to major domestic players including HAL, TATA, and Mahindra. Mahindra Defense has partnered with Brazil's Embraer to offer the C390 Millennium. Meanwhile, TATA has partnered with Lockheed Martin to offer the C130 Super Hercules. These aircraft could be used not only for troop and cargo transportation, but potentially for aerial refueling as well. The program also has strong domestic manufacturing requirements. Around 20% of the aircraft are expected to be delivered in flyaway condition, while the remaining 80% will be manufactured domestically. The domestically produced aircraft must also contain more than 60% indigenous content. This could create significant long-term opportunities for India's aerospace and defense supply chain. And this 1 lakh crore rupee program comes at a time when India is already pursuing other major defense procurements, including fighter aircraft and trainer aircraft. So this could be an important long-term opportunity for companies across the Indian defense ecosystem. Next, Ultratech Cement. Promoter entity Pilani Investment and Industries Corporation is set to sell up to 17 lakh shares, representing around a 0.6% stake in Ultratech Cement. The transaction could raise approximately 1,909 crore rupees. The floor price has been fixed at around 11,481 rupees per share, which represents roughly a 3% discount to the current market price. Pilani Investment currently holds around a 1.5% stake in Ultratech Cement. So this will be an important block deal to watch today. And finally, an important update from the food and restaurant sector. The Maharashtra Food and Drug Administration has suspended the FSSAI licenses of 5 chain restaurant outlets across the state. This includes 4 Domino's Pizza outlets operated by Jubilant FoodWorks. The affected Domino's outlets include 3 branches in Mumbai and another outlet in Malkapur in Satara district. Inspections reportedly identified issues involving pest control, food storage temperatures, sanitation schedules, and hygiene protocols. The enforcement drive covered 104 chain restaurant establishments. It resulted in 2 business halt notices, 95 improvement notices, and 5 license suspensions. So this is something investors will be watching closely in Jubilant FoodWorks today. Now let's move to the quarterly results announced after yesterday's market close. And there were some interesting numbers here, starting with Tata Motors commercial vehicles. The results were good on a year-on-year basis. However, on a quarter-on-quarter basis, revenue, EBITDA, and EBITDA margin declined. But this decline can largely be attributed to seasonal factors, while Middle East-related disruptions also affected exports. So overall, I would consider the results positive. Next, Apollo Hospitals posted a very strong set of numbers. Revenue, EBITDA, net profit, and margins all improved strongly on both year-on-year and quarter-on-quarter basis. Overall, this was a very strong performance. Next, Lenskart also delivered a good set of results. Almost all major earnings parameters improved strongly. The biggest highlight was net profit, which increased by more than 273% year-on-year. So this is definitely one of the results worth tracking. Coming to IRCTC, revenue improved on a year-on-year basis, while net profit and margins improved on a quarter-on-quarter basis. However, several other parameters declined. So overall, I would rate the results as weak. And finally, VA Tech Wabag. Revenue, EBITDA, and net profit improved on a quarter-on-quarter basis but declined year-on-year. The positive factor was margins. Margins improved on both year-on-year and quarter-on-quarter basis. So overall, the results were just okay. And that's all for today's pre-market report. Now, I want to know from you, which company are you tracking most closely from today's updates? And also, which company's quarterly results should I cover in detail in today's post-market report? Let me know in the comment section. If you found this video useful, don't forget to like, share, and subscribe to Stock Market Meridian. And I'll see you again this evening with today's post-market report. Until then, trade carefully, stay informed, and keep watching the market. Thank you for watching. Signing off, Jai Hind.